Andy Lynch, portfolio manager at Schroder Investment Management, is with me now. I mean, on the day that Nestle has announced figures and it's told us about its ability to boost prices, you're keeping an eye on the likes of Nestle, Danone and Unilever because they've been hit a little bit lately, so now might be the time to buy these shares?
Absolutely. I think the sort of consumer staples sector looks to me pretty oversold. Given the quality of the businesses, the fact you can now buy them at quite reasonable valuations. And my sort of big macro picture is actually the world's going to be a pretty tough place for the rest of the year. We saw the US Federal Reserve saying, actually maybe the US isn't in as good a place as we thought. Yeah. And I think in those circumstances, consumer staples are a good place to be. And after the pullback they've had in the last quarter, it's time to get involved.
Europe's been the area of concern when you look at consumer staples. So will the non-European areas, such as Asia, emerging markets, will they be able to take up the slack?
I think they will help offset weakness, but they probably won't offset it entirely. But consumer staples, I think, are going to do a lot better than consumer discretionary, say autos, luxury goods, or
although
indeed
autos, especially luxury autos, I mean, you can't fault the BMWs or
they've been trading very well, again driven by Asia,
of course.
But actually, I think we will now start to see more weakness coming through in core Europe, as if my macro thesis is right that the world economy starts slowing again, people are going to start deferring purchases of cars into the future. You can defer a car, but you can't defer your morning cup of tea.
Which area of the world then concerns you the most, US or Europe?
Bizarrely, probably America, where I think the payroll data shows that this is an economy that is still really quite sick. There's no real job creation going on in America, nowhere near enough to sustain the number of people wanting to enter the labour force. And so if we hadn't seen people getting discouraged, unemployment would now be well above 10% in America. And for an economy that prides itself on its flexibility, on its ability to create jobs, that's a really shocking number. And we're starting to see people coming towards the end of their social benefits, which just creates further social problems down the line. So America, I think, is a source of potential material problems.
And in a market that you say might head lower post-September, October, Andrew, Andy, where do we put our money right now? You mentioned the consumer.
I think sort of the defensives are still a good place to be. And then if you're investing in Europe, look for businesses that have got material exposure to emerging markets. Countries like in Asia, they did their crisis, they've dealt with their debt, and now they're actually in a much better position than we are. So I think we can learn a lot from them, but it's going to be a long and painful road to recovery.
Andy, thanks a lot. Andy Lynch there from Schroder Investment Management.